Good afternoon, everyone. This is Financial Literacy 101. And today we will be going over a few IPOs. We'll be going over the Hunt Group and also Snowflake. Now, we'll also be going over the Apple and Tesla split. Now, I broke down Tesla's split pretty much in detail last week. I was going over pretty much every day, just a little bit. We're going to talk about Apple as well. Now, the reason why I didn't go over Apple in great details because we understand that you don't, if you have an Apple phone, if you have a MacBook, Mac Pro, you know that Apple makes solid products, and Apple, this is not their first time splitting a stock. I believe this is their fifth time splitting their stock. But we're going to go over those things in detail. But first, before we cover anything else, we're going to give tribute to, we're going to give homage to, we're going to give honor to one of our Black brothers, Chadwick Boseman, okay, who died from stage 4 cancer, who's been battling for the past 4 years. Now I understand that a lot of you know him as, quote unquote, the Black Panther, but that's easy to note, ladies and gentlemen. That's very, very easy to note. The question is, did you know him as a man? Now, a lot of you remember him as the Black Panther, one of his most pivotal and well-known roles around the world. But what you guys do not understand about Chadwick Boseman, this is easy. We understand that he's an actor, okay? He's playing a role, and he did a very tremendous job. I watched the movie 5 times, but again, I believe Louis Farrakhan said it the most. Dig into the man, dig into who he really, really was and what he supported and what he was all about, okay? What he was all about. This is how you know him. And you also know him about playing roles of T'Challa and being with the one thing that a lot of people didn't know about is this, and I'm gonna get into a little more information. We won't stay here long, but we have to give tribute and homage to this late great. It says Marvel was originally unsure about Black Panther having an African accent, but Chadwick Boseman pushed back. He didn't want to play the role unless it had an African accent. That says a lot. Because Wakanda is a mythological city in Africa, and they want to strip that of that African accent. I won't stay here long. Now, what's other important to note is this. It says off screen. This is the man that you need to know. Off screen, Boseman was beloved and as a role model in his own right, a star who overcame early obstacles to become a voice of encouragement, especially to Black people. He spoke often about the contributions of his predecessors, including those he portrayed on screen, and was open about his own challenges finding success as a Black man in America, okay? Then he goes on to say that Boseman graduated from Howard University in 2000 and returned in 2018 to give the commencement address at the historical Black University. He spoke of getting fired from an early acting role because he questioned the show's producer about playing on stereotypes. Sometimes you need to get knocked down before you can really figure out what your fight is and how you need to fight it, he told the class of 2018. So that is paying honor and homage to a late great that was an activist, but wasn't as public as most of our activists are today, which we need to love this guy in his early death, way before his time, okay? So now, let's move on. Let's talk about the Hunt Group. Now, for any of my UK subscribers, my people out in the United Kingdom and London, this is mainly for you guys because this stock, the Hunt Group, is modeling things like Amazon, the JD.com, and they are e-commerce site, okay? They're e-commerce sites that deals with beauty products as well as nutrition products, and they do have a form of ingenuity, okay? So that's what we need to understand about this company right here. They have a lot of a great movement in their stock, and they're about to release their IPO any day. Now, you have to get listed to understand when they're gonna release this IPO, I've been looking and searching for the release date, but there's no hardcore evidence that this will be releasing anytime soon. Now, what I did here was the second week of September. So for any Forex traders, for any traders who actually invest internationally, look out for the Hut Group. I think they're going to make head waves, and they're going to simply be competing with Amazon overseas in the UK. We need to understand that the Hut Group is an online retailer that sells its own beauty and nutrition products as well as luxury goods. And we're going to go to their website. Their website is not complicated. I'll say it that way. And one of the well-known brands is vertically integrated model, means that it has the ability to deal with everything from product design and manufacturing to online sale and logistics in-house, just like Amazon, unpinned by its all-in-one growth platform named Ingenuity. So you may think this solely as an e-commerce company, and that's what a lot of people think of Amazon. But as I said, and I'll say it before, that Jeff Bezos says this is a technology company that deals in e-commerce, or AKA books, when they first started. And the Hut Group is exactly the same. They are a tech company that deals with beauty, nutrition, and ingenuity on their platforms. Now, we're not going to dig too deep because we have quite a bit of information to go over, but I want you guys to be aware of this information. If you're an international trader at all, you should be looking at the Hut Group. And now, me personally, I'm thinking about going and buy me a IG account, to sign up for the IG account. That's an account that you can use over in London and actually start investing in, okay? So let's go over to their site and give their site a quick peek to see how their site actually looks. Let's look at this really quickly. So here's their site. They have a short film. I won't play it all. Let me turn this up just a little bit. Okay. Yeah. THG, the Hut Group. That's all that means. So they're showing you lipstick, eyeliner, mascara, nutrition, sort of protein, my protein. That's one of their leading. And they do a lot of business, ladies and gentlemen. It's that they're in the UK, they're in London. It's not widely known in the US or any other country, really, but they are growing exponentially and could be a great source for you to actually invest in. Okay. All right, let's move on. They got all the information right here. Let's see if we can pause this. There we go. All right, it says from small beginnings on pure passion and ambition, and taking us from being a startup in Greater Manchester, England, to a global leader in e-commerce, okay? So again, I'm making you very familiar with this brand because it's imperative for you to really diversify you guys' portfolio. A lot of you are investing on the US stock market with those exchanges of the NASDAQ, S&P 500, and also the New York Stock Exchange. But here's another opportunity for you to diversify your portfolio and decrease your risk. We understand when you have a well-balanced portfolio, you decrease your risk in investing tenfold. It's absolutely imperative that you invest on a wide spectrum, okay? You got the information up here. We build brands. They're talking about their beauty products. We drive ingenuity. We create experiences. And again, we're just going over here for a quick overview for you guys to have some sort of insight. You know what I thought when I was looking at this earlier, guys, I saw this anti-slavery policy. Now, most companies, if not all, have an anti-slavery policy, but they wanted to be well known because, well, you know the history of the British transatlantic slave trade. You know about even modern day slavery over there. So I'm gonna keep it as that. But they wanted to really point that out. Okay, they really wanted to point that out to you guys. Okay, so that is the Hut Group. Let's see what other notes that I have here that I think that's really, really important for you guys to go over. But that's pretty much it for the Hut Group, guys. That's pretty much it for the Hut Group. And again, they're an e-commerce company out of London, okay, out of London. Now, the next company we're going over It's called Snowflake. Okay, it's called Snowflake. This company is very, very interesting, and I am very excited for this company. You won't really hear me say that too much. Okay, you won't really hear me say that too much. Now, this is a tech cloud company. Okay, cloud data, cloud storage, etc. And they're out of San Mateo, California. Okay, or Mateo, California. So this is a U.S. based company. Okay, a U.S. based company. And the guy who's spearheading this is really known from another company he IPO released. It's called ServiceNow. And his name is Frank Slootman. Okay, so Frank Slootman, 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 I believe. That's how you pronounce it. But nonetheless, this guy has been doing great things in this market. Some of my notes read here. So Frank Slootman is preparing to take Snowflake public 13 years after its first tech IPO data domain and 8 years after his second. Slootman made over $550 million from his ServiceNow stock sales, and he is now on 5.9% of Snowflake. Okay, of course, he's made tens of millions of dollars for his investors, etc. He's 61 years old. All of these things are important in investing, especially with the IPO. His age, what he's already done, his street cred, his credibility. This is going to be his third IPO. His other IPO, ServiceNow, I think is already up 13-fold. So basically, he is a guru. He is a giant in this particular field. Okay. So what is Snowflake? Let's find out what Snowflake is about. Okay. A lot of you may not be familiar with Snowflake, but again, Snowflake is in the market with Google and Amazon when it comes to cloud space storage. I did a video, and I do a lot of videos, so don't quote me on this, guys. But I did a video saying how that cloud space warehouses, cloud space storage, cloud space data management is the wave of the future, if not the future, okay? Because a lot of people you hear we're living in the future. And what they're saying is the things that are going on now today, they're not going anywhere. They're just going to increase exponentially. And the technology is going to be more virtual. It's already data driven, okay? It's already data driven. And he's even making cloud space data driven. Now, he did an interview, and let me get right down to his notes because he said something very important. He said something very important, and I totally agree with him, okay? Now, what's important to this is that on August 24th, Snowflake, a fast-growing software company, as we went up, issued financial statements in anticipation of an IPO. So this was last week or a week and a half ago, last week. He says, I have written about many companies before their IPOs, but this one I'm really intrigued about, okay? Because now let's think about two exceptions of the rule with IPOs who've done absolutely phenomenal coming out the gate. One is Zoom, the platform I'm using. Now, I use Zoom, and I also use Restream, and I also use IBS Studios or OBS Studios. But when it comes to Zoom, right, they released April of last year, and their shares are up 3.8 fold, fourfold, 3.8, let's round it up, fourfold since then. And now Snowflake, okay, Snowflake. Now, although Snowflake is losing lots of money, and anytime you guys hear that a company is losing lots of money, the number one thing that you're like, you know what? Nah. But even though it's losing lots of money, its growth rapidly, and all the investor is confident that its shares will soar the day it goes public. Okay, let's talk about this. This is coming from Forbes. One of the analysts here says, I expect the shares to keep rising after the first day. It says Snowflake CEO has a tremendous track record taking companies public, and he does. Snowflake industry is large and growing fast, and it is. Snowflake business strategy is a winner. When I think about all those futuristic movies, right? Whether it be virtual reality with the things on your face, guess what all of that needs? Guess what Zoom needs to do all of this? They need virtual cloud storage. Like in my office here, I have a shredder, we have laptops, we got lights, okay? But we don't have any file cabinets. You know why? We store everything up in the cloud. And I know some of you are old school, you're like, I got my stuff hard copy, tomato, whatever fits your boat, but I'm not a paper guy, okay? I scan all of my information using my tiny pro scanner, and I slave it. I slave it. Wow. I save it to one of my clouds. Okay. Whether it be Google, OneDrive, Google Drive, OneDrive, or is it one box, something like Dropbox or something like that. And I also have another data cloud storage called Mega that does 50 gigabytes for free. Okay. So I have all these cloud storage to save all my files. And number one thing you're probably saying, what if it goes down? And I'm like, well, what if the house burned? Okay, so it really doesn't matter from that. So let's get into this. I talked about his successful track record. And again, this is an IPO. So before you start investing tons and wads of money, you have to be absolutely sure. Because I told you what I did was I didn't know about that company Phantom, that virtual, the online service company Phantom. And I bought like 10 shares and it shot up to $19 from $10. I lost a lot of money on that. So I really need to do my research a lot deeper. Okay. And I usually do. I just saw it. So the IPO, I said, what the hell? And I invested. Okay. But I didn't invest much. Okay. $100, not a lot of money to invest. Now, when we're talking about IPOs, you need to dig, research, analyze, go over everything. So that's what we're doing here. And the reason why I'm taking a little bit more time on Snowflake, because Snowflake will be listed on the NASDAQ. So most of my viewers are based in the US, or a few from the UK. So I went over the HUD group for you guys. Now we're talking about Snowflake for the US investors. And granted, if you have a US account, you can invest as well. Now it says, what it says here, it says that he took Data Domain public in 2007 and sold it to an EMC in 2009 for $2.4 billion. This is for a street crate. That was the name of the company. Okay. Then ServiceNow IPO, we said that the stock is up a whopping 18.6 since its release of their IPO back in 2012. Okay. We're going to read this a little bit more information. I won't bore you too long here. We're going to move on to Apple and Tesla. It says here he grew Snowflake to the point where it raised $450 million in October of 2018 at a valuation of $3.5 billion, according to ZNet. Must have mixed feelings about Slootman taking over his job. One, on the other hand, he talking about this guy that was from, where this guy was from? I think it was from IBM or Microsoft, and he owes 3.3% of the company. Whatever. That's not really pertinent for you guys, okay? Oh, yeah. He's from Microsoft. Okay, I was right. He's from Microsoft. I'm reading my notes, guys. Sorry. Then it says here, Amazon and Microsoft both offered data warehousing, but Capital One picked Snowflake. You know how large Capital One is? Do you know the security that Capital One needs when it comes to cloud storage? Because everybody picks Amazon and AWS. They're a beast, and also Microsoft. But Capital One picked Snowflake. And they're talking about they don't take full advantage of the cloud, and Capital One was looking for a shift forward. They concluded that the Tetra could not take them into the cloud, and they picked Snowflake because it could run 250 concurrent data analysis queries compared to 60 for Teradata, as much lower price, 25 to 30% of what Teradata charges. So they're going with a service that is cheaper for them, to operate, for them to actually have that service that can do 3 times as much as the work in half the time. Then it goes into some more tech talk that I have on here, some notes I have that is pretty not interested. But your question is this: when in the hell is this stock is going to release? Because I'm excited. I'm excited because I think that the stock, again, just like the HUD group, is probably going to release sometime in the second week of September. And that's been very important for you guys to keep your head up. Now, they were going to release 2 times over, but they kept setting it back for whatever reason, and granted, I know the reason. Some of it was financial, some of it was contracts, some of it was just people hating. So if you guys, let me tell you something, guys. If you believe that people don't hate in the investment world, they absolutely do to other companies. Right? They're going to be filling a niche. They're going to be filling a spot when they come in with more innovative and advanced technology than your Amazon and your Microsoft and your Google, even though Snowflake was using some of the platforms of AWS and Google to set themselves apart and put themselves in another position. This is what they do. They're like, I'm gonna take a step up on Amazon. I'm gonna use some of your technology. I'm gonna take a step up on Google. I'm gonna use some of your technology. And these algorithms, these formulas that they use, guys, they just change a parentheses or a slanted line here, a dash there, so they won't be copyrighted. Okay. So thanks for staying with me so far, guys. Let's see who's in the room. I see we got Big Uzi. What's going on, big man? Oh yeah, live long the king chat. That's right. That's what I'm talking about. Also, if you like this video, guys, give it a thumbs up. If you're new to this channel, please subscribe. Where we do everything with money, we do absolutely everything. And now and every time and again, I go on a good rant. All right, let's talk about Apple. I know you guys are waiting to see it. I know you guys are waiting to see it. Good old Apple. We're gonna do like we usually do. We're gonna do a 5-line chart. Now, granted, we understand that Apple was up $500, $499, but $500 when the closing bell on Friday, okay? They were up $500. And some of you like, what in the hell happened? Guys, Apple did a 4-to-1 split. Apple did a 4-to-1 split. What is 4 times 125? Anybody? Anybody? 4 times 125? That's $500. Okay, holler at your boy. All right, so they were up $500, and now that they do the 4-to-1 split, now granted, I want you to see something with me. I only invested $100 in Apple. I was doing that in fractional shares because if anybody ever seen my portfolio, which I'll go to so you can see it, at one point I was up 13,000. I did a little something with the money. I lost it. That's what I did. I didn't even take no money out. I lost a few of my money, and I told you, look at this, guys. I was all the way up here, and that was from the past week, and look where I'm at now. That is the power of investing, the power to make money and the power to lose money. But I didn't sell nothing, so I still have my stocks, okay? We're looking for evaluations. Well, let me take that back. When it comes to option trading, you can absolutely lose a lot of money, and I did, okay? It says in the past week, that I've went up that amount, but as you can tell, that amount has declined because I'm only up 1,000 in the past week, and I almost made $4,000 in one day. Okay, and that's all these options you see over here. Here are my individual stocks over here, and then it goes into cryptocurrencies. And then that one stock I was telling you about, Phantom, it was up 19. Let's see, it dropped down here to 17, but it did go up to roughly 19. Okay, roughly 19. Where was it? Yeah, it went up to 18, 19. But nonetheless, I made good money because we go to the 5-year, just released July 31st, 2020 at $11.50. But I bought this at $10, okay? And I show a lot of you that last week on my Webull account. Okay, I showed you that on my Webull account, but we're talking about Apple right now and that 4-to-1 split. And what that simply means, if you guys are unfamiliar about a 4-to-1 split, that means for every 1 share of Apple you have, you will receive 3 more. For every 1 share of Apple you have, you will have 4. That's what that basically saying. So if you got 1, then you got 4. Just adding 3, 4-to-1 split, okay? 4-to-1 split. Now, they already split this, so come Monday morning, look for Apple to drop a little bit. Look for Apple to drop just a teeny little bit. Most companies, when they do a split, and now let's talk about Apple, guys. Let's talk about Apple, because what we need to understand is Apple have been through this. So let's go over the credentials first. Before I get into my notes, let's go over to the credentials. Let's break it down like we usually do. So past 5 years, Apple has been up 429%. The past year, Apple's been up 141%. The past 3 months, 58%. The past month, 33%. The past week, they've been down 2.5%, but we know Apple has been doing absolutely tremendous. They've been doing great things. And again, what you see here is their 4-to-1 split. This is my take in Apple. Is only 1% of my portfolio. Let's read a little bit about it. I feel like I'm reading to the choir, the music that you already practiced for a month. But hey, for entertainment purposes, I'm not an entertainer, but some of you like to be entertained. Engages in the design, manufacture, and sale of smartphones, personal computers, tablets, wearables, and accessories, and other variety of related services. It operates through the following geographical segments: the Americas, Europe, Greater China, okay, Japan, and the rest of the Asian Pacific. The Americas segment includes North and South America. The Europe segment consists of European countries as well as India, the Middle East, and Africa. I think India is part of Asia. Okay. Anyway, and Africa. The Greater China segment comprises of China, Hong Kong, and Taiwan. I got it. The rest of Asia Pacific segment includes Australia and Asian countries. It produces and services include iPhone, Mac, iPad, AirPods, Apple TV, Apple Watch, Beats products, Apple Care, iCloud, digital content stores. Listen to that, digital content. And the iCloud part is important when we was talking about Snowflake, about all of these companies in that cloud space. See, a lot of people, what you need to understand, I like Google, you like Apple. I'm not the whole Apple phone is better than Google or Samsung. You like what you like, guys. I'm a Pixel guy. I love my Pixel 4, okay? I love my Pixel 4. Everything is intertwined with Google because we know that Google owns YouTube, and Alphabet is the parent company of Google, which is also the parent company of YouTube, so on and so forth. We can go over this in Pixar, all the companies that Google actually bought under their brand, and then Larry Page made a parent company for tax reasons, insurance reasons, and other business-related reasons why he did that, okay? It's all about layers of protection. I told my, the gym I go to is called TBT, and it's a Brazilian, Afro-Brazilian guy who, Afro-Brazilian, that's his nationality. Afro-Latino, which is, he's a Black Brazilian guy. And I was showing him how to break down his business and break different segments because he also teaches MMA fighting, okay? Jiu-jitsu, he teaches all this other MMA fighting. I said, you know, break it down where you have a hierarchy of business, where TBT, okay, total body training, then under that you got TBT gym, then you got TBT fight. I was giving them just names. You could call it TBT MMA, but TBT fight, then you have TBT health, where when people get into that really health world, they got their own gym, then they start selling their own products. So you go on TBT health, you can, you know, BCAAs, protein, something similar to NA-Expo, and then you have TBT train, where you're going to be training the trainer. So I said, hey, make all of them LLC, and each individual one have their own EIN number from the IRS. So when you break somebody's leg doing TBT fight, they can sue TBT fight because that is what their membership is under. They won't be able to touch your own other businesses under the TBT hierarchy. But when you have everything encompassed in one business, if everything is under TBT, the entire business is at stake. That is why all of these companies have layers of protection. That's why you see Amazon, they might put their name on something. You'll see Amazon Halo. That's their new fitness watch, but that's a different LLC. Amazon Web Services, that's a different LLC. They don't have everything under the Amazon brand. They break it all down in a hierarchy. It's building a pyramid. It's building an empire. Amazon is at the top. Then all of these different things, Amazon Whole Fresh, Amazon this, Amazon that, is breaking it down into a pyramid. So everything falls under the Amazon brand, but when you want to go sue which part of the department are you suing? This is for layers of protection in business. That's why you'll see people have multiple LLCs under an umbrella. It's for protection. All right, let's move along. I know I kind of went on a little class there, but nonetheless, the more you know, the farther you'll go. Okay. So employees, they have roughly 137,000 employees, founded back in 1976. I was not born. Dividend yield, 0.63%. Not too much. I think, let me see. If I go off of 500, 125 dividends at 6 point, I know it's less than $1. I'm gonna say it's around 80 cents. It's around 80 cents. Okay. Collections, computer hardware, 100 most popular stocks, computer software, electronics, technology, consumer products, telecommunication, and retail. Let's see some news here. 3 things you need to know about Apple stock split. We'll get into that. Apple's investor, watch out for the winner's curse. Look here, guys. Why do people hate in the investment world? I just don't get it. Aren't we all trying to make money? That's all I'm trying. Man, I tell you. Bulls and Bears week, Apple, Salesforce, and Teslas, and more. Analyst rating, buy 67, hold 23%. Sell at 10%, doesn't reach my 25% criteria for me, even blink an eye on this one. So I absolutely will not. Let's see what the Bulls say about Apple. It says between greater smartphone penetration in emerging markets and repeat sales to current customers, Apple has plenty of opportunity to reap the rewards of its phone business. Apple's iPhone and iOS operating system have consistently been rated at the head of the pack in terms of customer loyalty, engagement, and security, which bodes well for long-term customer retention. Now, some of you are Apple customers for a long time and will be Apple customers in the future. They say, we think Apple is still innovating with introductions of Apple Pay, Apple Watch, Apple TV, and AirPods. Each of these could drive incremental revenue, but more crucially, help to retain iPhone users over time. Now, that's what the Bears are saying. Let's see what that's what the Bulls were saying. Let's see what the Bears are saying. And if you guys are not familiar with the Bulls and Bears, Bulls are always looking to the positive side of a stock and a company growing, and the Bears are looking at some things that the stock may fall or the company might not do so well, which decrease the stock price. Apple's decision to maintain their premium pricing strategy may help fend off gross margin compression, but could limit unit sales growth as devices may be unaffordable for many customers. If Apple were to even launch a buggy software update or subpar services, its cloud diminished the firm's reputation for building products that just work. Now, granted, they're always talking about what could happen. If was a fifth, we'll all be drunk. Okay. If was a fifth, we'll all be drunk. They're always talking about if this and if that and if this. It's a technology company that pretty much built its own ecosystem, and every single thing in the world could happen. The headquarters of Apple could burn down. Their fire sprinkler system may not work. Like, I know I'm a bull in most cases, guys. I really bank on the stock market doing well, because the one thing I know about America, we are a country of consumers. We are a country of consumers. We buy. That is what we do. That is what we do. We buy, and anytime we give something away, most times than not, it's for charity, but it's for tax write-offs. It also says Apple is believed to be behind firms like Google and Amazon in artificial intelligence, or AI, development. Notably, Siri voice recognition. Now, we know Siri is not that good. We know it. We know that Alexa and also, the Google, I'm just going to say Google Voice because I have a Google device in here. I'm not going to say, but we understand that they're a lot better. And out of all of these, Google is the best in my opinion. It is not because I'm biased towards Google, it's because I have a smart home that I built myself here. And one day I may show you, I'm waiting for some stuff to come. I only been in this new house for 2 months. So I'm still waiting for a new couch to come, some movie chairs. But once the house gets, I'll do my last video of my house. But anyway, I have Alexa devices and I have Google devices almost in every room, and I like Google a lot better. Okay, you ask Echo a question, they're like, "Oh, I don't understand," or "I don't know what you mean." It's always saying stuff like that. But all of them are still better than Siri. Not to beat up Apple. Okay, which could be problematic as tech firms looking to integrate AI into order to deliver premium service to customers. Okay. As you look at their earnings, they were up Q1, they went down Q2, they moved sideways on Q3. Look for them to ticker a little bit tomorrow. And the reason why I'm doing one on Sunday is because for you guys to really, really, when they go down, this is where you guys should be buying. This is where you guys should be buying a lot of Apple. And I'm gonna get into some of the details because I really want to break this down. You see my history here. I put $321, $421. I was buying all sorts of Apple and selling Apple and making dividends on 19 cents. But I have bought a lot of shares, okay? I bought a lot of shares and I sold a lot of shares. Other people in this market, Microsoft, Facebook, Amazon, and Netflix. Now, what do all of these have in common other than social media? Instead of Netflix. When I mean social media, we're talking about video web service. We don't understand that Microsoft got some like Microsoft Meet, Facebook, Facebook Video Messenger, Amazon has everything virtual. What all of these had in common is Snowflake. It's Snowflake, the IPO you should be looking for. Not that they deal business with Snowflake, but we're talking about the cloud that everybody's talking about, that everything is in the cloud. Facebook virtual storage is a cloud. Microsoft, anything they store is in the cloud. And they're also using cryptocurrency, not cryptocurrency, they're using blockchain technology to secure some of their cloud information. Amazon, cloud, their website, cloud, everything is cloud, cloud, cloud. When I worked for Amazon, we had our own cloud storage as managers, your personal cloud where you can do things, okay? And they also have their own messenger service called Chime, C-H-I-M. And I believe that it's actually on the Google store that you can download and actually, you ever heard somebody use the word, "Oh, I'm gonna chime you later," or "we were chiming," or certain verbiage is being used, and Chime is a way to message. And that's a real internal messenger, but I think you can download it publicly. So just for a little more insight and information about that again, I'm putting it out there, just like I did Neo. Look out for Snowflake, because believe me, I mean, my ears are to the street. I'm like, when is Snowflake releasing? What's Snowflake releasing? When is Snowflake releasing? When is Snowflake releasing? Wow, Boston got Toronto up 80-60 in the third quarter. Boy, I sure look different without Kawhi Leonard. Anyway, moving on. Let's talk about some money, guys. I'm sorry. I'm up here looking at the game too. It's Sunday. All right. Now, here's the information that you guys need to know. You know what? I won't cheat you today. I won't cheat you. I know I'm cheating. Let's go into Market Watch. I'm going to keep my same rhythm. Now, Market Watch still have Apple up $501, but we already understand on the investment platforms, Apple split, okay? We're going to briefly go over this. So in the 52-week range, Apple went up $309 roughly, $309 roughly, okay? So when I'm looking at this, they went up 300 some odd dollars in 1 year. Dude, that is phenomenal. Look at their EPS. This is a company that is very, very profitable. I want you guys to look at everything that's going on. Now, again, my son here, they gave him a MacBook. The state did, so he can do school at home because of COVID-19. They gave him a MacBook playing with taxpayers' dollars, which is absolutely phenomenal. So we don't got to worry about the kid catching any, corona. Got Rona all in his blood. Okay. And Apple furnishes so many schools with those MacBooks. This is a company that's doing absolutely well. And granted, I don't like Safari. People are like, oh, you can load Google Chrome on there too. Okay. I don't like iOS. I'm a Windows guy. Okay. I don't even like the Google platform now. Granted, when I didn't pay for Microsoft Office, I was using Google Docs, Google Sheets. I was using all those things. And I figured out how to work because they integrate with all my platforms. Because, you know, they're building their own ecosystem as well. And Google, FYI, if you're listening, AKA YouTube, if you're listening, Alphabet Company, if you listen, we are waiting for your smartwatch. We want you to beat up Apple. I want a smartwatch. I got my phone. I got my YouTube page. I need me a Pixel smartwatch, okay? He is lonely. My Pixel is lonely, ladies and gentlemen. I need me a Pixel smartwatch. Okay, back on task. Dividends, 82 cents. I told you, right over just 80-something cents. I knew it. They ain't paying that much, but you are getting a little bit of money with your dividends and growth potential. Let's see if there's anything else we need to go over. I don't think so. No, there's some headlines about the split. What did that mean to you, etc. Let's get a little more detail. The reason why I'm really taking my time on Apple today, guys, because I didn't last week, and I want you guys to be well informed with the investment decisions that you should be going over. Now, I want you guys to expect Apple stock price to be about 75% lower when trading begins, especially tomorrow, because that's what usually occurs, right? Because again, Friday, Apple closed around $499 to $500. So when they open, look for them to drop down to about 124, 123, 122. Hopefully no lower than that. No lower than 120, okay? Somewhat within that range, okay? Let's see what else my notes have, because let me tell you something. Apple historically, this is their 5th stock split, and a lot of you probably didn't know that. This is Apple's 5th stock split as a public company, and it went public back in December of 1980. 1980. Some of you wasn't ever born. I think I was still under the age of 2. Yeah, I was around 2 years old. Apple conducted listen to this. Apple conducted a 7-for-1 split on June 9th, 2014. 7-for-1. So think about the people who invested. Think about that. For every 1 share of Apple that they bought back then, they got 7 stocks. And then right before this new split, they had $500 for every 7-for-1 split. So they had 7 stocks times 500. I have no idea how much money those people made, but let me tell you, it is a boatload. There's a lot of rich people off of Apple, okay? Then they did a 2-for-1 split, going back a little bit, 7 years after they became public, back in 1987. They did a 2-for-1 split, and they did a 7-for-1 split back in 2014. They also did a split during, they did 2-for-1 splits in 87, 2000, and 2005. This is their 5th stock split, and this is 4-to-1. So for every 1 share of Apple, you're going to have 4 shares now. It says Apple never split its stock. If is the word here. If Apple would have never split their stocks, their shares, their share price will currently be $28,000 a share. $28,000 a share. And the one thing you should be asking yourself is this, especially if you guys who had tons and shares of Apple, is why are they keep splitting their shares? Let me tell you something, ladies and gentlemen. I'm going to give you the one true answer that I hope every investor will give you, the reason why a company like Apple will split their stock so many times. First and foremost, it's about power and position in the market. Who's ever at the top of the food chain of Apple, they want to retain their power and position. Okay, because power, position comes money. Number two, when you split your stock like this continuously, you are giving investors opportunity to invest at a low price point, which in turn helps your innovation. How do you think that Apple continues to compete in the technology market? There is no way regular investors are going to invest $28,000 for one share. They want it so split that the novice investor that can only invest $200 a month will invest in Apple. Or the investor that can do, they can buy 100 shares at 28,000 can still invest as well. But they're allowing all these people to invest in their company, so the guy who can buy 100 shares at 28,000 doesn't have a large stake in their company. Because I'm buying shares and fraction shares. I even deposit more money for this week so I can buy more shares of Apple. Because as they begin their evaluations, is going to primarily stay the same. Their stock is going to go through a little bit of trembling, a little bit of decreasing throughout the week. So it's time to buy Apple. So a lot of you were saying, I don't have enough money. I don't have this. I don't have that. Now you do. And we need to understand on Friday, Apple stock jumped 10.5%. It wasn't that much. Let's go back. Let's see this. Let's look at this. Let's look at this. I'm gonna read some of your notes. I can't see your notes right now because I'm working. Okay, my bad. It didn't jump that much. How much you jumped on Friday? Let's see. Friday was what? The 28th. Says that it was down. Now, this was down because the anticipation of the split. Let's see where it is right now. Okay, right now we have it at 125. They're actually up. Okay, they're actually up. But look for them to go down tomorrow. All right, let's see who else we have in the room. We have Kendrick Taylor. I've never been able to grasp options. Okay, I did part one of my option trading. It was more informational, Kendrick. So if you look on my YouTube channel, you will see option one trading. I did that not last Thursday, but the Thursday before last. Okay, I did a live class on option. I have another one company, but that one's going to be very, very technical. It takes me time to build this information and to really decrease some of the terms in a manner that everybody can soak up the information and kind of get like a walk-in knowledge of options and what you can do with them. Because I want to build a base for you guys. It's kind of like you would in English class. A teacher can't really help you to write an astounding paper. But what an English teacher can do is teach you sentence and paragraph structure, punctuation marks, and help you to increase your vocabulary. Then from that point, you have to take that information and start to build the way you write, essentially. If that makes any sort of sense. Hopefully it's clear as mud. See, hers on the rise says, if you want to change something, invest in stock ticker, SCPT today. The earnings report comes out September 3rd. If you don't like your return, simply dump it and move on. Okay, we'll look into that. And Kendra Taylor says they hate because they didn't buy earlier. I absolutely believe that. Okay, I absolutely believe that. So, as a matter of fact, let's do that right now. Let's go into the, what do you say, SFET? SFET, I believe he said. Is that what he said? SFET. Let's look at that really quickly. I believe that's safety. Let me share my screen with you guys. I appreciate you guys spending some time with me on Sunday. I know you guys are either just got back from church or maybe a family lunch, or you guys are paying for a family dinner, or you doing with me watching the basketball game in the background, You know, that's why sometimes you can't show your background. YouTube be hating. YouTube be hating like, hey, you showing stuff in your background. Look at that. I got the TV on in the background. You're not gonna steal my shine, YouTube. That's why I'm hiding my background. Okay. All right, dark mode. All right, let's look at Safety. Safety is a technology company. This is their collections. Okay. This is their collections. Their technology company, information technology, software service. Okay. Let's look what they released. They just released August 17, 2018. So this is a 2-year-old stock. And as a song would say, I'm going down. This is a part about buying a stock during the IPO, then watching it. Look at, oh my gosh. Harris on the rise. Let me tell you something, man. I don't know what type of stake you got in Safety, but this stock, let's see, this stock opened up at $143. This is the basic pump and dump, okay? I could be absolutely wrong or I can be absolutely right, but let me tell you, my family, my friends, my haters, my trolls, that is when a stock releases is at $143 a share, then it pops at $240 per share. Then it trickle down economics. It go down, 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 and down. You went from $240 per share to $1.28. Let's go through the 5 years. Past year has been down 94%. Past month, 48%. Past month, 18.47%. Last week has been on up 2.4%. And the last day up 0.79%. I am not saying that this stock won't perform well. I'm not saying that. What I am saying that this stock has not performed well. It has not. It has not performed well at all. This is a very risky stock that I wouldn't invest in off the bat. Now, just because he brought it to note, I may watch it for a while, but I'm not going to invest in this stock. No way, no how. No way, no how. And the reason for that is in the past 2 years, this stock has essentially lost $239. Now, when the stock came out at 140 something dollars, it showed me that the old school pump and dump. I really haven't seen it with a stock that comes out that high of a price point. But let me tell you, at a high price point like that, ladies and gentlemen, let me tell you, that's absolutely seems so darn fraudulent. That's just my take on it, okay? That's just my take on it. But nonetheless, guys, that is my time for this. I might be on a little bit later and teach some debt management and also some reason why you guys should really be saving a lot of your money as well. This is Financial Literacy 101. Let's remember the late and great Chadwick Boseman. Rest in power, my brother. Thank you for everything you've brought to this earth and to our lives. And I'm not talking about Black Panther. I'm talking about you being a silent but verbal Black activist on the behalf of your people. The reason why I say silent is because he wasn't so public. But if you go and research him, you'll see a lot of things he said for us, for Black people. So I remember your life as a man, not as an actor, as a man. But of course, Wakanda forever. Learn money and be inspired. You guys have a great and wonderful day.